Why do banks love responsible people? Banks love people like you, like myself. Good credit, consistent payments, predictable behavior. From their perspective, you're perfect. They don't need you desperate. They need you dependable, solid, responsible. And the longer you stay dependable, the longer money quietly leaves your system forever. And when we start looking at the real cost, this isn't about interest rates. It's about time. Time quietly, slowly working against you, month after month, year after year. If you're a successful entrepreneur who did everything right with money and it still feels heavier than it should, you're in the right place. If you're still here after seeing that title, it's probably because some part of you knows this isn't about money. It's about responsibility. And what responsibility costs when it's pointed in the wrong direction. By the end of this, you'll understand why people who do the right thing with money often pay the highest price for it. Let that sink in. And who's this for? This isn't for people who are bad with money. It's not for reckless people. This isn't for people who have done the wrong things. This is for the people who did the responsible thing. You built something real. You've kept things together. You showed up when it mattered, and somehow you're still carrying the weight. If that's you, you're going to recognize yourself a few more times before we're done today. When I talk about the weight, here's what most people don't say out loud. Success didn't remove the pressure. It concentrated it. More responsibility, more people depending on you, more consequences if something goes wrong. Only responsible people feel this. I think Spider-Man's uncle captured this best when he said, "With great power comes great responsibility." Let me tell you about the entrepreneur behind today's numbers. He's a 56-year-old man. He's a father of 10 kids, ages 11 to 30. And he didn't start out as an entrepreneur. He started as a paramedic, not chasing money, just serving people. And over the last 30 plus years, that's turned into a multi-million-dollar business built on service, faith, and responsibility. And his story isn't a story about greed. It's about stewardship. And here's what matters. Again, nothing went wrong. You didn't make bad decisions. You made normal decisions, common decisions, inside a system that rewards obedience. Write that down somewhere. Our system rewards obedience. You didn't fail, you merely complied. And once you see what the system actually is designed to do, a lot of the self-blame and pressure will disappear. When we talk about changing one thing, this is where the belief changes. Once he realized that nothing went wrong, he stopped asking, how do I fix this? And he started asking, where should my money live first? He decided to pay himself first, structurally. He deposits $125,000 a year into his specially engineered, right, whole life system. And he has a $50,000 minimum floor. Has to go in no matter what. And that's roughly 10% of his income. And he's following the first law of wealth, right? When I put up the guides, so he can go from 10 to 25% of what he earns. And the first law of wealth is pay yourself first, not as a suggestion, as a system, as a law. And this gives him control, guarantees uninterrupted compounding, and a guaranteed tax-free estate for his 10 children. That's the cherry on top. At 56, this isn't about accumulation anymore. It's a calling. Now, let me show you why this one decision changes everything else. Why do banks love responsible people? People like you. Banks love people like you, like myself. Good credit, consistent payments, predictable behavior. From their perspective, you're perfect. They don't need you desperate. They need you dependable, solid, responsible. And the longer you stay dependable, the longer money quietly leaves your system forever. And when we start looking at the real cost, this isn't about interest rates. It's about time. Time quietly, slowly working against you, month after month, year after year. While you stay current, while you stay dependable, most people think about money in terms of months, in terms of hours, weeks, months, not years. And the system profits when you ignore the cost over decades. And so when we talk about the fork, the decision, right, the crux, every high income entrepreneur reaches a fork, not because of their income, not because of intelligence, because of belief, specifically where you believe your surplus should live first. And there are three paths. Most people, they only ever see two of them. And so before we talk about the various paths, so smash, like, and subscribe, ring the bell so you're alerted to all the new content. Many of you are watching. Up to now, you know that the common path is what the banks want you to do. So let's jump in, see why banks love responsible people just like you and what that really costs you over time. Smash, like, and subscribe, and let's go. Let's talk about the bank's way. Before we talk about timelines, you need to see what normal actually looks like. These are his 11 active debts: business loans, property debt, life expenses, and the average interest across the board was 6.69% to run his business and his life. He sends out $49,074 every month, consistent and persistently, to the lenders. This is the common path, the most traveled path. And it doesn't feel reckless. It actually feels really responsible. He's doing all the right things for himself, his family, all of his employees, all of his customers. And we start examining deeper what the real cost is of the bank's way. Path one, you feel responsible. Like I just mentioned, you stay current, you make the payments when expected, consistently and persistently, and you don't rock the boat. You would check your credit score on Experian or one of the online places, and this is what capable people do. This is the common path, and it feels super safe. And that's by design, and it keeps entrepreneurs focused on time in terms of month, money in terms of by month. And when you stack those payments over time, this is what happens. 294 months to clear the debt. Think about that. That's 24 and a half years. I'll be 75 by the time this debt's cleared. So I want you to actually feel that number for a second. 24 years ago, the iPhone didn't exist. Most of our kids weren't born. Most of his 10 kids weren't born. And your business looked completely different if you had a business at all. And this plan assumes that nothing changes for the next 2.5 decades. Over that time, this entrepreneur will pay $6.738 million in debt. $2.75 million of it paid in interest. When he first saw this in our conversation, like in our meeting, he didn't argue. He didn't ask for different assumption. He just stared at the screen. He completely silent. And then he said something really honest. He goes to me, Jason, I've never looked at it this way. Because like most entrepreneurs, he was thinking in monthly payments. $49,000 a month feels manageable when the business is producing millions. Feels responsible, feels controlled. What doesn't feel manageable is realizing you're committing to 2.5 decades of future cash flow to them, to over there. And we say this often, but this isn't about the interest rates. If I told you the rate was 6.5 or 7%, your brain would start negotiating. You'd start looking for spreadsheets. That's not the issue. The issue is simply time. Time quietly doing its job. While you stay current, while you stay common, that's the disciplined obedience. And it's exactly what the banks designed the system for. Now, I want you to notice something important. This isn't the worst way to do this. It's just the most common way. There's actually nothing wrong with this path. And the most common way almost always looks reasonable, doesn't it? Right up to the time, the moment you finally see it over time. And this is usually where people shut down. We make decisions in the moment to move things forward, but we shut down because they can feel, he felt how wrong it was. but they don't know how to see another option. I think this is why most people always say, Jason, I wish I would have learned about this 20 years ago. And when you take the vault, when you take the software that we now have access to, this is where the vault changes every conversation. This is where the vault lets you stop guessing. No, we didn't need weeks. This is our first call. We didn't need weeks. We didn't need assumptions. We didn't need hypotheticals or a genius with spreadsheets on our team. We got a couple of those, right? Mr. Yenny, the freak in the sheets. We didn't need that genius with the spreadsheets in the meeting. The vault in minutes. We turned debts on, we turned them off, we changed payment order, we drag and drop stuff, we ran side-by-side scenarios. And this is important, nothing magical happened. The income didn't change, the discipline didn't change, the business didn't change. What changed was the visibility. And that's when he leaned back. He said, wait, are you telling me if we follow this plan, all 11 of our debts are paid and this saves me 188 months? That's over 15 years where cash flow belongs to his family, not lenders, not institutions. And then he asked about interest. And I remember this moment clearly. And this is why we're doing this webinar, because his tone changed. The numbers weren't small. $1.778 million recaptured. Neither of us spoke. We were both shocked. I actually ran this a few times because when you hear a number like that, you don't argue, you don't optimize, you recalibrate. You begin to see things clearly. And when we look at the second path, just using math, just using the vault for the math, the second path is smarter. You optimize, you can use the avalanche, the snowball, you use math. And using the vault, we modeled every scenario in minutes. So he could take this to his financial team, to his CPA, and have the spreadsheets and the clarity to share with them and show how it works. Less interest, faster payoff, and most high performers stop here. And they don't ask the ultimate question, can this be even better? My question, how can we optimize this further? It's one of my favorite things to think about. Now, this is where most people think the story ends, right? Most people think there's two paths. And to be clear, the math, in path 2, it's powerful. Math is powerful. Using the vault, we showed him how to pay less interest, shorten the timeline, clean things up. And this is where a lot of smart people stop because it feels like progress. It feels like a solution. But here's what we noticed together, what he noticed. Even with better math, there was still no system, no liquidity, no guarantees, no control. He was more efficient, still dependable, and every new opportunity still required permission. Then he said something else to me that really mattered. He said, Jason, I spent 30 years building this business. I don't just want to get out of debt faster. I want my money working for me while I do. That's why I booked the call today. And that's when we started talking about the shift, right? The uncommon path. And path 3 isn't about a product. It's not about the vault. It's not about specially engineered whole life. It's about changing one belief. The belief that surplus money should go to lenders first. Instead, he paid himself first. Same income, same discipline, but his surplus lived inside his own system rather than in his business or with the lenders. And before I show you the total results of this, I want to say this clearly. You don't need to agree with me. Some of you will take this framework, run the math, and execute it on your own. That's a good outcome. It's actually a great starting point if you weren't using math in the system before. Others, folks here, will realize that installing this system correctly, having the right structure, the right guardrails, the right long-term thinking matters more than speed. If that's you, I'll tell you how we can help with that in a few minutes. Now, let me show you what this belief actually produced for this entrepreneur. The third path, the less traveled path. Uncommon action earns uncommon results. As you're looking at these numbers, I want to say something clearly. Like, look at the numbers. Is that not exciting? If it's exciting to you, and this isn't about convincing anyone, it's about deciding whether you want help implementing this or, whether you want to take it from here. When he saw the final output, he didn't celebrate. He didn't fist bump. He didn't say, that's incredible. He actually leaned back and he goes simply, "So this means the money will finally stay with us?" That's what changed. Here's what the numbers actually show. $1.778 million in interest recaptured. And I want to make that real because big numbers can feel a little abstract, can feel like it doesn't really relate to my situation. But that's about $17,000 every single month coming back to his family. Remember, 49,000 was flowing out. He's just recaptured $17,000 a month. Not earned harder, not hustled for, not invested more aggressively, not expanding the business. Didn't have to do anything new with his business. That's $17,101 per month that no longer leaves his family. That's margin. And here's the part that most people miss. Even while eliminating debt, even while redirecting cash flow, he still built $997,000 in tax-free liquid capital that was ready at a moment's notice for the next opportunity, the next emergency, right? When our emergencies become urgent, whether it's good or bad, he now has the money to go and do whatever needs to be done. Liquid, safe, secure, protected. Because he didn't stop paying himself. He became an honest banker. He kept making his premium deposits. He treated this like the system, like the business it actually is. Not as an expense, but as capital allocation. And that capital, like I said, it stayed accessible. If the business needs it, it's there. If opportunity shows up, it's there. If one of his 10 kids need it, it's there. If life happens, change happens, it's there. Now let's talk about the part that really changed how he saw all of this. By the time he's out of debt, many of what used to be liabilities, like his corporate building, become paid off assets. Properties with no lender attached, cash flow without pressure, without money flowing out, assets that work without demanding more from him. And that alone changes how you sleep at night, how you feel. And then there's a legacy. At the same time the system was working while he's alive, the living benefits, there's a $3.32 million guaranteed death benefit, tax-free estate for his 10 children. No probate delays, no market risk, no guessing, just certainty. So if something happens to him, when he does graduate, his family doesn't inherit confusion. They don't inherit debt. They don't inherit pressure. Instead, they inherit clarity, liquidity, and paid for assets. So no, this was never about getting out of debt faster. It was about control, about stewardship, and about knowing while that he's here, his money works for him. And when he's gone, like we all will be one day, his value keeps working for his family. That's what it means to become the banker. So here's the real question. Now that you see this, can you unsee it? It's kind of like the Matrix. Some people feel uncomfortable and go back to what's familiar. Others say, I see it now, and I can't unsee it. As Henry Ford said, whether you believe you can or you believe you can't, either way, you'll be right. Either way. You don't need us to run the math. You can subscribe to the Vault. You can plug in your numbers. You can follow the plan that the Vault gives you. But if you want help installing the system correctly, having your special engineered policy that's designed for liquidity, protection, and legacy, and avoiding the mistakes that cost years, then the next step is a conversation. This isn't about doing more. It's about finally putting your discipline to work for you instead of for them. So as always, super blessed to have you here. And as always, invite more people. Be that gift to someone else. Invite them to this webinar. And until then, I'm going to see you in this next video where we'll keep showing you real case studies and how you can use this system to go from where you are today to where you actually want to be. As always, be blessed. Thank you for your time. See you in the next one.